So this morning, before the market opened at 8:30, we had the non-farm payrolls data released, which was actually quite dovish. It was so dovish that from 8:30 to 9:30, the market actually went up substantially. The news about the job openings or lack thereof was a little negative. However, it was better than expected. We opened substantially higher than yesterday's close, but the rest of the day has just been a long, slow, grinding down red day, which is a complete turnaround from the move this morning. This move this morning, I believe, went up over $1 right after the news. So from 8:30 to 9:30, it was a pretty decent climb up in the green. But with that, let's go ahead and take a look at our sell alerts to see what we have. First thing that we're going to look at is DraftKings. We clearly are in a downward trend on DraftKings. We had a cross yesterday from the fast moving average. We absolutely have a continuation down. So that indeed does confirm a sell. You can see we currently have 16 shares, which we have 4 books of 4 shares each. I already have a sell order for 4. So we will be selling 1 book of 4 shares. Let's go ahead and put that in, 4 shares. All right. Now we will be selling those. Whoop. And that's one of the mistakes that I was warning you about. We did sell those DraftKings. We're now looking at 3M. 3M, we clearly had a cross yesterday of the fast moving average going below the slow moving average. And we do have a downward trend of that cross, even though it's higher than the opening of yesterday's candles open. So we will be selling 2 shares of 3M. All right, we made a small profit on that. All right, we made roughly $1.50 profit on that. Next one is Uber. Uber clearly is in a downward trend. We're about to actually see the fast moving average cross below the slow moving average. We currently have 6 shares of Uber. I max out with 8 shares, so that's 2 shares per book. We had price move down several days ago, so we had price cross, and then this candle is a confirmation of that particular cross. And then we had price cross 2 days ago with a confirmation of price the past 2 days. So we will be selling 2 shares. Well, actually, we'll be creating a sell order for 2 shares of Uber. So we'll be taking 10% of our 90s place, which is 9 cents. So we'll be adding 9 cents to our total purchase price of Uber. We purchased it at $91.53, so we'll be selling that with a sell order at $91.62. And there's our sell order for 2 shares. The next on our list is SPXL. And that trigger was sent today. You can see if we take a look at the candle. You can see price crossed below the fast moving average, but then it went back up, and we're currently above the fast moving average, but the alert was sent on today, but we clearly had a move yesterday, which price moved back up. So we will not be doing anything with SPXL. We are now actually on our buy list. You can see that yesterday we had the fast moving average cross above the slow moving average. We do have price continuation above yesterday's move. Even though we're in a red candle and price is moving down, it's still higher than yesterday's close. So that is a purchase signal, but we're going to go ahead and take a look at the monthly chart. We are a pretty good distance away from our fast moving average, so we're going to buy 1 book of 4 shares because we are a good distance away. I'm afraid that price might just turn around on us. However, if price does continue to move up next week, we'll probably purchase a few more shares of Aristonet. All right, so now we're taking a look at the ETF IWM which is the Russell 2000, which is the best 2,000 small cap companies in the United States. So we have a situation same as Aristonet. We had price cross above the fast moving average yesterday. We have price moving above with a continuation move. Even though it's a red candle and price is moving down, we're still above yesterday's close. So that is a good signal. This is a clear continuation. So we're definitely going to be buying several shares of IWM. or at least one share. We currently have 3, and I max out with 4. That'd be 1 share per book. So we're going to purchase 1 share of IWM. And IWM, by the experts, and what the experts are saying, they're saying that IWM is probably going to be moving up over the next several weeks, but only time will tell. So now we're taking a look at Johnson & Johnson. So Johnson & Johnson has been consolidating, just moving sideways since roughly August 19th. You can see the date down here is across our bottom, and you can see the cursor. We have a horizontal and vertical line that indicates our date and our price. Johnson & Johnson is a great defensive stock. You see we've had quite a move from 150 to roughly 177 right now. However, today's candle is red and price is currently below the fast moving average. So we do not have confirmation of the price cross several days ago. So we will not be purchasing Johnson & Johnson today. We're going to move on, take a look at our next stock, and our next stock is Sherwin-Williams, and that is a beautiful candle. That's absolutely, at quick glance, a clear purchase. We will not have any problem purchasing that. Sherwin-Williams is definitely going to benefit from the possible upcoming interest rate reduction, and the news this morning helped confirm that that is the most likely situation, that we're going to have a price reduction. So we purchased 1 share of Sherwin-Williams with that great candle move, and we're going to be looking forward to the move as it continues over the next several months or years as the interest rates are reduced. So the next one we're taking a look at is Twilio. This is definitely a stock that we're going to want to take a look at a little bit more closely. We are in a long downward decline. We started dropping several weeks ago. Even though we have price confirmation and price movement of the fast moving average across the slow moving average, we're in a steep downward decline. So we do not want to buy just on the cross. So we're going to take a look at our monthly time chart. So we're on a larger time frame, and you can see that the current price is below our fast moving average. When price is below the fast moving average, I really don't particularly care to purchase. Even though it's a green candle, which is a signal that we have momentum up, we're still overall trend and a downward trend with the monthly candle confirming that. So we will not be buying Twilio. So our next stock that we have a buy alert on is the ETF IWF, which is the Russell 1000. It's 1,000 large cap companies in the U.S. We do have somewhat of a continuation, not a true continuation. We had price cross, not only price crossed yesterday, we had 2 days ago, we had the fast moving average cross above our slow moving average. However, today's candle is red, and the price currently is below the close of yesterday's candle. So that is not a continuation. We're going to move on to our next one on the list, which is Roblox. Roblox has been on a great run for the last 3 months. And I mean, that's a heck of a high after the earnings report. And then, of course, we've just been in a small downward move. We had price cross above the slow moving average, our fast moving average here. We have not had a continuation of that move. Today and yesterday, it's clearly a downward trend, so we will not be purchasing Roblox. We only want to purchase whatever stock that we're looking at. We want the fast moving average above the slow moving average, and we want price to be above and moving upwards. But we have a downward move, so we're just going to move on to our next stock. Next stock we're going to look at is Celestica, CLS. Beautiful move here. Last 3 months have been great, been making money. You can see this is a stock that I actually use to day trade. So I've been making money slowly but surely, waiting for the move to gain momentum. You can see 3 days ago, we had the fast moving average move back across the slow moving average, and we've had a clear continuation in price. However, because it's such a large move, I did not buy see any additional CLS. So IBM, we have a price move that had been going down for over a month. We had price move above our fast move or our slow moving average. So taking a look at our monthly chart, we can see just like Aristonet, our current price is below our fast moving average. So even though we have a trend that appears to be going up on one chart, we have another price direction on a larger time frame. So I'm probably not going to be purchasing IBM. As I said with Aristonet, I like to buy stocks when the price is above the fast moving average on our 3-month chart. So we're going to take a look at the next stock, which is Disney. We clearly have a grinding move the last several weeks. We've been running basically sideways, but slowly moving up in our average price. You can see the fast moving average is moving up. However, we have a downward move on price, so we're not going to purchase Disney today. Next stock is Limbach Holdings, which is LMB. Clearly downward move. We can cross that off of our list. We won't be looking at that again. Next stock is MCK, which is McKesson. McKesson has been moving sideways for a little over a week. We had price move above our slow moving average. However, today we currently have a downward price move, so we do not have continuation. Next, we're going to be taking a look at Keysight Technologies, which is KEYS. Again, just like the previous few stocks, for over a week, nearly 2 weeks, we had price move across the slow moving average. It's a nice grind up with the fast moving average. We clearly have a confirmation of that price move. Even today's red candle, it went down a little bit for the day, but we're back up. We have a nice little doji candle here. We currently have 1 share. I like to be maxed out with 4, so we're going to purchase 3 shares. So we now have 4 Keysight Technology shares. Our next stock that we're going to take a look at on our buy list is XTL, which is an ETF for telecommunications. This has had a heck of a run for the last 3 months. This is a clear buy signal, so we're definitely going to be buying 2 shares. Right now I have 6 shares of the ETF XTL. I like to be maxed out with 2 shares per book, so we're going to buy 2 additional shares of the XTL ETF. And hopefully we'll get them at this price here. Doesn't look like it's going to go, so we'll cancel this order, move back over into our active trader. Will we get them at this price? It looks like we're not going, so we're going to cancel those and just hit buy market, and we'll get the average price. We even got it at a little bit higher than what we were trying to get when we manually selected in the active trader. So the next stock that we're going to look at is Ubiquity, UI. All right, now this is a great signal. However, we've had a pretty big move on Ubiquity. Not only that, they're $500. So I like to be maxed out with 4 shares, but because they're $500, we're going to take a look at a few more other stocks to see if we have better opportunities, like Lowe's. So Lowe's has had a pretty good run for over near a month and a half. So it is a stock that I'm definitely going to look at with the 3-month candle. Now, even though I'm going to break my rules, even though the fast moving average is below the slow moving average, we are clearly in a good 3-month uptrend, and with the more than likely, it's near 100% that the Fed is going to do a interest rate reduction. So we're just going to max out on Lowe's. Right now we don't have any shares, so we're going to go back to our regular daily chart, and we're going to max out with 4 shares of Lowe's. So that's 1 share for each book. There we go, and we got that. We didn't have to worry about buy market. If you've been watching my videos, you know I've got some pretty good rules, and I just violated one of the rules, but that's based on news and information that is going to happen in the future, possibly. So GE, our next stock that we're going to take a look at, we had a cross almost a week ago of the fast moving average over the slow moving average. However, today we do not have price continuation of yesterday's move. Yesterday was a pretty good move, but we do not have price continuation. Even though price went down substantially and has come back up, which is a bullish indicator, I'm still going to wait until Monday to see what GE does. We have a lot of energy stocks that are going down right now. I don't know why, because the experts were expecting energy stocks to just do amazing because of the need for energy for AI, and it might be because they're all of the data centers aren't fully up and running. Now, FICO, this has got a big downward trend since the beginning of July, basically. FICO got some really bad news. Don't remember what that was, but you can see the drop on that particular day that the news came out. So let's take a look at our monthly chart. So you can see here we are in 1, 2, 3, 4, 5, 6, 7, 8, nearly 9-month downward trend. You know, even though this month and last month we've had green candles, we're still below both the fast moving average and the slow moving average. So FICO is clearly fighting a overall downward move. So we will not be purchasing any FICO. Also, they are fairly expensive stock. They're $1,500. I only have 4,200 roughly, and I want to maximize our potential. All right, so Amazon, let's get back to our daily chart. Amazon, we've got 3 shares. When we're maxed out with our 4 books, I like to have 1 share per book, so that would be 4. Even though we have a downward move today, I'm going to break another rule, and I'm just going to purchase Amazon because it is Amazon. It's part of the FANG stocks, and in the long run, you can't go wrong if you just purchase Facebook, which is Meta, Apple, Amazon, Netflix, and Google. So we're just going to max out and get our 4th share, because over the long run, Amazon's only going to go one direction, more than likely, unless there's something absolutely horrible happens with the economy and the country. Next on is PayPal. We had price cross a little near 2 weeks ago of the fast moving average over the slow moving average, but clearly 4 days ago we had, or 3 days ago, we had a downward move in PayPal, and yesterday and today is confirming that downward trend. So we will not be purchasing any PayPal because of the current price action. The next stock we're going to be looking at is, well, we're not looking at the stock, but that was everything on our buy alerts. So you can see we've had a move up since we started this video. The candle was almost completely down near the slow moving average here, but it's moved up since we started recording. So that's a pretty good move up. That's adding portfolio, increasing our portfolio balance for the day as opposed to a downward continuation. So right now we want to take a look at our activities, what we did today. So we sold DraftKings, we sold 3M, we put a sell order for Uber, and we bought Aristanet, the ETF IWM, Sherwin-Williams, Keysight Technologies, XTL ETF, bought some Lowe's, and we bought Amazon. So let's go back to our watch list. Let's get that up. So you can see we had a nice 3-month move with the S&P 500. All right, so for today's trading activities, we made $825.32. Now the majority of that, the overwhelming majority of that, close to $800 of that was through day trading. The remainder was from the 2 shares that we sold. And for the week, I made $1,390.37. Again, the majority of that is through my day trading strategies. But don't let that dismay you. If you've watched my videos and you've seen some previous results of my trading activities, you've also seen me buy and sell stocks at a profit using my swing trading strategy. And is that swing trading strategy that I'm recording and trying to put in front of all of your eyeballs. The overwhelming majority of retail traders are not profitable. I am profitable, which is why I'm putting my videos up, just in case you are unable to become profitable. Hopefully I will help you to be profitable. All right, so our results for today, or excuse me, our portfolio of our new account to date, we are performing 1.66% compared to the S&P 500 at 1.49%, which is 0.17% better. And we're at 16.26 for the old account compared to the 1054 at the old account of the S&P 500. So combined, the old account with the new account, using all of the same funds and all of the same shares, we are performing at 17.97% compared to 12.03%, which is 5.94% better than the S&P 500. So 5.94% better performance over the S&P 500. And that's what we're looking for. You know, If we can't beat the benchmark, then we might as well just be investing in the benchmark. So with that, we are completely done for today. We're completely done for the week, and I hope you all have an absolutely amazing weekend.